earnings of Raymond. They reported their numbers. Revenues have doubled. To talk about the outlook of the company, let's bring on board Amit Agarwal, Group CFO at Raymond right now. Mr. Agarwal, thank you so much, and thank you so much for joining in with us on ET Now. Let's talk about starting with the revenue as well as EBITDA. Both have seen a very good growth in Q1. EBITDA margins have come in at almost 16.2% versus 17.3%. But this margin pressure that you're seeing, what is the reason for this pressure on the margins this time?
The way we have seen the revenue growth, first of all, let me clarify that Raymond Limited, the numbers which have been reported is for the two segments of our business, which is the real estate and the engineering business. Because as you all know, that the lifestyle business has been demerged as on 30th of June 2024. So now the numbers for that company is obviously not included in these numbers. And if you've seen the growth, significantly we have delivered both on the real estate business as well as in the engineering business. Now let me talk about the margins. Obviously the real estate business, as you continue to launch your projects, and since we are in a build-up phase of the real estate, what happens is when you launch a project, you need to spend the marketing. You need to talk about that project, bring about certain expenditure, which is a starting expenditure. However, as per the accounting norms, that needs to be debited directly into the period in which it is incurred. So over a period of time, over what we are not looking just one quarter, because we are building a sustainable long-term business where one quarter maybe you will see a dip, but on a sustainable basis, you will see a consistent anything between 22 to 25% EBITDA margin, which will be there in the real estate business. As far as the engineering business is concerned, you see what has happened is the engineering consumables business, which has been weaker, and because of the domestic market also, which is retail led, there was excessive heat as well as the impact of some bit on the elections, some of the holidays, that has impacted the first quarter engineering consumables number.
Right. A very good morning to you, Mr. Agarwal. This is Cheryl also joining in the conversation. And you had earlier told us about the listing of your lifestyle business in Q2 of this financial year. Any update on that? When can we expect the listing of the arm?
So first of all, let me tell you, it was not that we will list in Q2 FY25. What we had said was the lifestyle business, which is a demerged entity called Raymond Lifestyle Limited, will be listed in this quarter, which is in the second quarter of fiscal 25. However, what we have also announced in the month of July, that we have demerged our real estate business. And you know, the process which in India takes is anything between 14 to 16 months for completion of a demerger. So let's say around this time, or let's say in the next fiscal 26, we would have also the real estate company as a listed entity on a standalone basis in somewhere in the fiscal 26, maybe in the third quarter of fiscal 26. That's what we are expecting to happen. So first you'll have three operating companies. One, Raymond Limited, which will have engineering business as a subsidiary. Second, Raymond Lifestyle Limited, which will have the lifestyle business, which is getting listed, let's say in the next 45 to 60 days. And then the third is the real estate company, which will be listed somewhere in the fiscal 26, maybe in the third quarter of fiscal 26.
Okay, so FY26, maybe sometime we could be expecting a separate listed entity. But what is the execution time for that 32,000 crore GDV which you have mentioned? And, can you break up for us how much of this would you have planned on doing via JDAs, JVs, and how much will be via new developments?
Very simple. As I mentioned, that 100-acre is a Thane land parcel. Of this 100 acre, you have 40 acre, which is almost translating to 4 million square feet, is being constructed right now as we speak, which has a potential of, which is going to deliver 9,000 odd crore revenues, and the balance 60 acres, which will deliver 7 million square feet, which will be developed over 7 to 8 year period. And I think that will give another 16 to 18,000 crores. So that is on the Thane land itself. Then on top of it, we have signed 4 JDAs, which is also translating somewhere 7,000 crores. First JDA project in Bandra, Nirmal Nagar, we have already launched, and we have got very, very good responses. We have sold more than 150 flats as we speak. out of a total 270 flats which we have launched so far. We still have many more towers to launch. I think to that extent, we see that this 32,000 crores, which is as of now between the combination of JTAs as well as the Thane land, we should be able to execute 7-8 years. But we continue to get more and more traction on the JTAs. We are evaluating JTAs practically every day, and there are enough and more opportunities available to us, considering the kind of configuration product which we deliver to our customers. There is a huge sort of trust on our ability to deliver. I think we are one of the very few builders in the country who has been able to execute the project before the RERA timeline. And I think we are the ones who have delivered our first phase of project of 10x in Thane 2 years ahead of RERA timeline.
Right, Mr. Agarwal, let's ask the most important question that's actually on everyone's mind today. Wanted your views on the provision seen on the LTCG on real estate in the finance bill. Last evening, you got that amendment actually coming in from the finance ministry. How do you see this panning out for the demand for the real estate sector?
There is a real estate demand, and I think what we feel very good about is that in India, there is still a lot of first time buyers. As people coming into their professional lives or the business or such things, there are young customers who come and buy homes, and home buying is an emotional decision. So therefore what we feel is that having the tax, and yesterday obviously the FM gave a very good opportunity to the people to choose between either the old methodology or the new methodology, so people can calculate on themselves. As but that has never been a very big buying decision, or buy a home or not buy a home only on that pretext. There was an important factor, but it was not a sole reason why somebody. And you see, what we cater to, our whole philosophy is to cater to the belly of the market, which is the typical 1 BHK, 2 BHK, 3 BHK, and a 4 BHK. And you see, our product starts from a 370 square feet to a 1400 square feet, which is between the 10x and address by GS. And only very few flats which we have made is of a 2400 square feet, which is moving up more like 7-8 crores. But that is very, very few inventory. So I think our...
Okay, Mr. Agarwal, thank you so much for joining in with us this morning on ET Now, talking to us about the company, the lifestyle business, when should we expect the listing, and on the real estate side. Thank you so much for joining in with us.